Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day market recap for Tuesday, the 9th. Well, a little bit more of the same in terms of how we started the day. We had another gap up today. That's been basically how this market has been going since I would say for at least the beginning of April. We're gapping into the open. There's some excitement in the first like 2 minutes of the market, sometimes a little bit longer than that, depending on the day. And then, the market is just being sold for the most part. And, I typically we'll see see questions, or traders always like looking for a reason. Oh, what did it today? What was the sell program? One of the things that I always note that there's never any questions when the market goes up. When the market has a big day going up to the upside, there's never any questions about what was it. But if there's a sell program, or if there's some profit taking, or if there's something else going on, retail traders are always looking for an answer for a reason. So what I want to do in this video is not so much to give the market an excuse, or it was this Fed speaker, or it was this, or was I don't know. You can make up your own reason. What I want to do is just go through sectors in this video, and you can kind of make a conclusion, and that's what it's always about. It's putting together like the pieces of the puzzle to figure out whether this market is beginning to or is on the path of weakening, or if it's doing just basically some sideways consolidation or resting for now, or of course if it's strengthening, which I don't think that we're in a strengthening market right now. I think it's one of the first two choices. Either the market is really starting to kind of break down one by one, or whether or not we're just basically going sideways. Now, I'm probably not going to have the answer to that question completely, but I will give you a couple ideas. First things first, risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through is for information purposes only. So a couple things. So, of course, we do have some events this week, right? We've got the CPI report tomorrow. I'm just going to go over this really quickly, and then I'll go to the matter at hand for you. Let's just because we want to know when we have events, right? That can kind of change things. But there's the CPI that's for tomorrow. We're also going to get the Fed minutes. It's going to be a busy day tomorrow because you're going to get the CPI, you're going to get the Fed minutes, which again is not a Fed meeting. It's just what they said during the last meeting, and then sometimes they provide additional language. But we know we've had a million Fed speakers since then. I'm being dramatic, but we've had a lot of Fed speakers, so I don't think that we're really going to learn anything new. However, we have to watch because the market could move around a little bit. Then we had a bond auction today, which was pretty quiet. We're going to have two more of these bond auctions. So tomorrow, CPI, Fed minutes, and then bond auction at 1 o'clock, right? And then, of course, we'll have the 30-year bond auction tomorrow. So, this week we're kind of filled with these bond auctions, and at 1 o'clock is really the time that you want to pay attention to them. All right, but so I wanted to cover that. But nice move by the bonds today. They were up. It kind of felt like a little bit of a safety bid for a little bit today. Like they were kind of moving up because the volatility was going higher. The VIX did top out at around 1650 today. So 1650. And then once we kind of hit that point, I think it was around like 1030 or so, the VIX really kind of came in, and you could see finished red on the day. So, it just kind of it gives you a sense of like what kind of a day it was. Just pretty streaky. And I think, for how I normally trade, a little bit difficult to trade, right? Because all of a sudden we're going in one direction, and then all of a sudden there's a sell program, or boom, there's a buy program. So if you're kind of sticking to like your convictions, and if you're buying the dip right now, if you're thinking that the market is going to come back a little bit right now, that's happening. But like I said, the reason why I want to go through this is because we want to be aware of, just like we kind of saw last Thursday, that the market dipped on Thursday and it kept dipping for that day, right? It kept going down, right? And we're starting to see some areas really kind of break down, and some areas hold in there. So You could see for the day, what was kind of interesting too was, that move in interest rates, I think, could be the catalyst or the reason, that helped that solar names go up. But it seemed like there was a lot of underperforming areas that did well today. That could also be that there could there was risk reduction today, like hedge funds who are basically long and short. There's some hedge funds that have long only, right? There's some hedge funds that operate a long short book where they've got longs and they've got shorts. So they may have been reducing on both sides a little bit today, right? And if you look at some of the areas that underperformed, some of which have been your better areas of the market, right? I saw names like Eaton, which I think is one of the best industrial names out there, was down at one point like 3.5% today. So I just saw a lot of recent market leaders getting hit the most. And outside of energy and gold miners, which have showed the most strength, and of course, and the silver miners as well. And then I saw a lot of names like the underperformers kind of go up. I'm going to dig into that in just a second, but I think this is one of the charts that I wanted to go over with you. So because I think, regardless of I think that some of these moves could just be for one day, you still want to watch and pay attention. I think this is one of the most interesting charts right now. Now, first thing to kind of note here, so this is the solar ETF, which has been a massive underperformer over the last 2 years, right? And I'm not one of these who think like, oh, it's down, it's a buying opportunity, right? To me, when something is down, it means that there's weakness in the stock. It's not an opportunity. But I do look for when things turn around. Mainly things, in my experience, like after they've been in a decent decline, what they do for the most part, on average, and things could change, but for the most part, after they go down for a while, most of the time there's not a V recovery unless there's some new major news that a company has or a sector has. Usually it's a big down move, or after a big down move, I should say, it's sideways. Right, you base, right, and there's books out on this about what's his name, Stan, I can't Weinstein, right? Talks about stage 1, stage 2, stage 3, stage 4, right? So this is like stage 1, and then stage 2 is coming out of the base. So that's what I think you want to watch for the solar names, because nice strength and trying to broke out of a very thin value area, which means that that this is that the volatility is compressed, and you might see a big move. So I think this will be something to watch. Right, and I've been long Generac since last week, and that trade has worked pretty well. Same thing. If you kind of zoom out here a little bit, you're going to see a big long base, right? So I will probably be in this to 146 if it gets up there to this virgin point of control. All right, so that's a couple things that I thought were interesting for the day. Also, speaking of names that have been stronger names, like here's another example. Now this did come back, right? Because I think maybe buyers kind of took advantage, and that's what you're going to see on some of these days. Like, so to me, Nvidia breaking down, not to say that it can't break down here, but it could just be like that the winners are being sold, for now. And again, that could be a tax type trade. It's something that we talked about in the TTG weekend video, where I mentioned that the first half of April could be weak. All right, so a couple of things that we want to keep an eye on here as names kind of dip, right? The first thing is like a lot of 20-day moving averages have been broken, right? A lot of stocks that were in uptrends for a while, right? First thing that they broke is the 20-day moving average, right? Next thing is basically, in this chart, and anyway, right? Here's the bottom of the value area, right? And we've broke through that, even though we came off the lows. So the next stop could be the 50-day moving average, right? So as we go through sectors, I'm just going to begin to kind of go through a couple different sectors, but and then we'll come back to the S&P and to the Qs. But here's XLK Tech, which is trying to hang on here. Notice what it did intraday. It broke all of these things, but buyers kind of came in and what's the expression that I'm looking for? They asserted themselves. That's the expression that I was looking for. So they have asserted themselves. And for now, like, so if you're looking to short or if you're looking to go long, you probably, on the long side, probably want a little bit more confirmation than this, because we really haven't gone anywhere here in the last month. And if you're looking to short, I would say watch for a break of the 50-day, decisive break of the 50-day moving average. Tech's about 30% of the S&P. Software is another one that we went over these charts in detail too in the weekend video, but this is another one that's sitting below the 50-day moving average. Again, what I'm basically doing is using the 50-day moving average to talk about strength or weakness, right? I want to be in strong things. I want to be in strong things that are trending, and that are acting very methodical with strength. If we start to break the 50-day moving average, right, that strength and momentum has dissipated, right? And that's kind of what you have right now in software. However, the below the 50-day moving average, but it's still holding on to the bottom of value. So we're still holding above those lows from last week. So it's kind of like, inconclusive right now unless we break that value area, or at least if we kind of get back above the 50-day moving average, even better above the value area. So that's software. That's inconclusive. The semis, which again, same thing. They've kind of lost that upside momentum, but for now they're just kind of resting. Right. So this one I would put in the category of just consolidating right now. Doesn't look like it's breaking down. You could see that it's yellow of the value area for the month, right? And the value area is just giving a sense of whether something is range bound for right now, or if price is below, you're downtrending. Price is above, you're uptrending, right? You see how we kind of make this as simple as possible to kind of make decisions. And when we're in this yellow area, I don't really want anything to do with it. And that's fine, right? That's how we make decisions, right? When something is going sideways, I don't want to be in something sideways. I want to be in something that's beginning to go higher, right? And by the way, nice in analog devices, right? This is one that looks like it wants to go higher, right? This is one that's breaking above its value area. So maybe it will begin to trend here, right? This is ADI. Very nice clean break higher. All right. Next group, I would say, what I'm finding pretty interesting is the consumer discretionary group, right? Because, of course, this is dominated by Amazon, so it's not giving you such a clear picture. But when you go through and you look at what's going on in terms of some of these individual names, which is where you're going to which will help you provide a conclusion. But you've got, Costco breaking its 50-day moving average. You've got RL, which had a strong earnings report, breaking its 50-day moving average, right? Breaking below, right? We know Ulta, which is more of like an extreme move on earnings, that broke, right? We know that Lulu broke to the downside, right? And it's still going, I heard somebody a few weeks ago talking about put selling. Yeah, good luck after they've reported earnings. Unbelievable. ANF, right? Take a look at this one, right? Made it, so sometimes you see these subtle little hints, right? Here it got a little bit ahead of itself, right? Well, got decently ahead of itself, right? And the next attempt, it was not able to take out those previous highs. Also, you can note, like, if you like the RSI divergence, right? Notice that the next peak was lower. So price, also RSI, and you could see on the third time around, look at the RSI really diverge, right? Versus the other times. So something is changing, right? It's a momentum indicator. So it was losing its momentum. And now look at it, right? So, after these things have been in these long uptrends like this, and here's what I mean, methodical, right? Check back to 20, right? Very minor pullbacks, right? This is lovely to deal with. This means that this is now breaking down, right? And that's a very toppy looking pattern for Abercrombie and Fitch. So, you always hear traders say, well, buying the dip works. Not when something is breaking down, right, and losing its uptrend. And again, these are the changes that you want to spot, right? This thing has been above its 50-day moving average for now like a couple years. And now this is a breakdown to me, right? And again, what would change my mind is if price gets back above the 50-day moving average. We only have what we have in front of us. We're not making predictions. We're just making observations by what we're seeing in the price action. So this is a trouble spot of the market, I think, retail. And again, it's tough to look at that consumer discretionary ETF. XRT is still hanging above there. So simply just sorting, and you can do this in FinViz too. But I have a sector watch list, but I think they have I think you could just go through and pick sectors or something like that with their pre-formatted ones. But these are the sectors that are below the 50-day moving average right now. ARC, which is not really a sector, but just something on my watch list. We know that's been in trouble for a while. But software, which we already went over. Also interesting, so it's not just like consumer discretionary, right? It's consumer staples that are breaking down too, right? People, I always see these odd things on Twitter talking about like, oh no, you don't want the minimum volatility equities to outperform. Why not? We've had many years where that's happened previously. Go back to, I think it was 2012, 2013, where low minimum volatility areas of the market outperformed, and the S&P did just fine. They just went through that period, but this is right around that 50-day moving average. I don't know why it says in FinViz that it's below, but again, this looks like it might be breaking this trend. For now, it's holding, by the way. So just correcting that. What it says below 50-day moving average, but I don't know why maybe they're just using a different calculation for theirs, right? And then the other one is the cyber stocks, which is interesting too. So again, a lot of the tech looks like it's holding on. Here's cyber, and again, all it will take is maybe one green day to get this back above and inside the value area. But for now, it's been showing some relative weakness here, right? Same thing a little bit to this extent. The RSI has been moving lower. Interesting, the move that Palo Alto had today. I'll be watching this name tomorrow, but again, one day is not a trend. I found it interesting that maybe it was, I'm not saying this is a heavily shorted name, but you look at CrowdStrike. I think CrowdStrike finished down on the day, and Palo Alto finished up on the day, and Palo Alto did not have good earnings. So nevertheless, I'll be watching this, and 279.29 will be the level to watch. Let's move over to, so those are some of the areas that I think are interesting that you want to keep an eye on. We know that communications, which is has the majority of this ETF, is Google and Meta, still looks fine. It's just moving a lot slower, right? Very little movement out of this. And I mentioned I would go over the S&P, what we're seeing with S&P futures, which again, we're hanging on here, right? We're kind of hanging on for dear life here at the top of the value area. So really this level, which I've been talking about, I put this out for traders too. Every morning I put out S&P levels. So for now, we're still holding on, right? You can't really make a conclusion about the overall market. We're staying above 52.45. For now, it could be some consolidation, but we start to kind of break back inside this value area and head towards those lows from last week, right? Then I would be erring more on the side of breakdown, right? Qs. There was a great comment in the trading room from earlier that they're very close to the all-time highs. So it's really tough. We just haven't gone anywhere for a month, right? This is the price action in the last month. It's been sideways, but 447.57. And I begin to kind of get more bullish and more comfortable with this market. But right now it's tough to kind of, get really positive until we start to kind of break above some of these value areas, right? For now, I think patience is the key. I think I'll probably end the video here. I was going to go over a little bit about the commodities, but I think even the energy stocks are probably due for a little bit of a breather, right? Here's Crude. Crude had a down day today. Also note that Crude took out that upside VPOC. So it's digesting a little bit, right? And energy stocks look a little bit extended up here to me. All right, guys, that is it for the end of day video. So again, what I tried to do is just kind of give you a view of, what the market is doing under the hood to kind of give you a sense of what, in terms of negatives and some positives. We just don't want to see the negatives continue, right? As we're starting to see the Costco and the Visa, break down a little bit. What we want to keep an eye on is if there's going to be more stocks that are breaking down, or if momentum is starting to move back into them. This is a chart, and it's not updated for today, But what I would focus on is down here, right? This is the S&P. So of course, 500 names in the S&P. This is taking the percentage above the 10-day moving average. So that's the purple line, right? And note that we've had a pretty decent move down here, right? And you know, I was looking at breadth today, which was not, it's kind of interesting in terms of up down volume. It was a good day, but in terms of new 4-week lows, they're picking up. Right, and of course these are the this is the 50-day moving average, and this is the 200-day. Stocks above the 50-day moving average, stocks below the stocks above the 200-day moving average. All right, so I'm trying to go through this quickly for you, but you know, here were the ending stats. It looked like there were 54 new highs today and 51 new lows. So it looks like by the end of the day, the new highs won out. However, we really haven't seen the new lows pick up like this, right? And not so much on the 52-week side, but on the 4-week side. And if we want to just look at the chart of this, right, to give you a sense of what's going on here, right? So you're starting to see the new lows pick up a little bit, right? And clearly we've seen the new highs fade from the high. So again, this is something to kind of keep an eye on. The more that we see, the more if the price continues to go sideways, right, and we start to see more and more new lows, that means under the hood, the market is really weakening. So something else to keep an eye on. More to follow tomorrow. Have a great night, everybody.